I thought this was pretty good. It's from Sam Zell. I'll just give you a real brief on him. This is from Wikipedia. He's a Jewish businessman up Chicago, and $5 billion net worth according to this. He's on the Fortune 100. He's around the same net worth as Leonard Starr in New York. Originally from Poland. His parents came from Poland. Jewish immigrants escaped the German invasion in 1939. Originally his name was Yolonka, He's mainly in real estate, and he had Chicago Tribune, other media investments, LA Times or whatever the hell it was. But my point is this, not getting on his life or anything like that, or what he's about 100%, but what he said, because his advice is very good. And he had these points on his website down here, egizell.com. First one is, these are most of them. When everybody's going right, look left. And that is pretty much what Mark Farber does. People are fearful, and the fundamentals are still strong, and everybody's afraid of that, or, they're all jumping in one place. Don't go with the crowd all the time. Operate on a condition of no surprises. Very important, Look out what's going to come from left field or right field. You never know. I mean, that's you got to be constantly researching. This one I like too. Every day, you are not looking to sell an asset in your portfolio. You are choosing to buy it. In other words, whatever value you got sitting in there, would you buy it right now? That's a good question, good way to look at it versus, that's another better way to look at it. Now, this is basically what Sam Zell was kind of about because, what I always heard, a guy I know used to work for him. He was called a grave dancer, which means he'd get a company that was like in the grave, was done with. There was all kinds of problems with it. You look at it, you say, well, this is what's wrong with it. This is where the cash flow was bottlenecked, or you need a little more capital expenditures in this area or that area. Or, this is where sales were weak and they're whatever. And we look for good companies with bad balance sheets, and then he would fix them up and sell them. So that's why he was the grave dancer. He'd resurrect them back from the dead. Operate on a condition of no surprises. I'm repeating that again for a reason, because there's a lot of stuff that comes out of left field. Liquidity equals value. Now, in the case of precious metals, this guy was into real estate, but precious metals, he could figure, hey, there's a hell of a lot more liquidity in precious metals than real estate. So it's a smart investment, considering that the bull market's nowhere near done. But that's an important one. Liquidity is important. Makes you wonder why they sell off precious metals for cash, right? When you can sell them at any time. I wonder. The definition of a true partner is somebody that shares your risk. And, you could say this about the silver coin community, the ones that are buying physical metals. All partners, because we're all sharing the same kind of risk. And this one, I think, is very important, because at one point in time, you're going to want to have to sell those coins, or you should, unless you want to collect them. Sentimentality of an investment leads to lack of discipline. So at one point in time, you don't want to be too sentimental about holding too many coins. Me, in my case, I don't know. I'm not going to know. I'm probably going to do it in pieces. I'm not going to do it at $75 an ounce, no matter what Lindsey Williams says. That's where price of silver is going. I think it's going more than that. Look for opportunities in markets with pent-up demand. That could be the precious metals that we talked about: peak silver, peak oil, peak uranium. I mean, down here in this net Dania chart going all the way back to 2006, you see this big spike in oil. Then it went down here, right? It was like under 30. It was like $35 a barrel. Well, what happened to oil exploration? And they killed it, right? They killed it. It was done with, and they changed their plans. And the demand is still going up, so that could apply to oil too. Understand the downside. Now, in the case of precious metals, I don't think there's going to be a super severe downside, even when they hit a peak. In the case of oil, I know what I'm going to do. When that stuff hits 150, I'm not going to wait for it to hit 200. It's done. It's gone. I mean, even when it's below that, I'm going to start taking some of it out in pieces. And that's if that comes true, because I don't know that for a fact. It all comes down to Econ 101, supply and demand. And that's one thing I think, keep it simple sometimes. Sometimes people get involved in too many details. They lose sight of the big picture. I saw Mark Farber on a video today, his doom, gloom, boom report, whatever. He's pretty uncertain about a lot of things, so he's still doing splitting everything out. 25% precious metals, which might include the equities in precious metals, 25% stocks, equities, 25% cash, different types of cash. You know, probably the, I don't know what he's got, maybe the yen now because it depreciated it, maybe it'll appreciate again. 25% real estate. And as of today, he still feels the S&P should remain pretty steady for a little while. The euro crisis will be postponed for the short term. Long term, it's not going to be postponed. And I also want to point out what Soros' idea, you know, because you know what, you listen to all these guys, even Soros, you know. Soros supports the idea of an all-encompassing euro bond. So that's one way that the euro could be saved. You know, and all this talk that it's going to fall apart, it may never ever fall apart if they do this. Now, Angela Merkel hates the idea behind this, and Germany hates the idea behind it. So it may not happen, but you don't know. You don't know. Depends on if they change some things around. Maybe it'll be okay. You don't know. That's why you should watch being caught up in the motions of day-to-day garbage. I just want to point out a couple things about Soros. Soros is heavily into oil too. I don't know, 2008, George Soros had financial connections to Uganda's oil. I'm just giving this briefly. He got this organization he backed called the Revenue Watch Institute, which established guidelines for Uganda's oil industry. Then Uganda President Museveni disregarded the guidelines. So the assumption is we got 100 advisors down there to make sure he does the guidelines, I'm assuming, right? And I think it's over other things like cobalt and mineral rights and all this other stuff. This was another one I thought was interesting. Obama signed an executive order to loan $2 billion to Petrobras oil exploration company in Brazil, in which Soros is a major stockholder. And that was a couple years ago. But keep in mind, Soros is, you know, big into Brazil oil. I'll keep that in mind. This I found interesting. This guy's smart. He's got all kinds of information nobody else has. But starting in 2009, Soros invested heavily in Western oil companies in Libya. His investments brought enormous returns, and then at the end of 2010, he mysteriously sold the Libyan investments and bought stock in Russian, Putin, right, and Venezuela, Chavez oil, right. So, yeah, he obviously, you would think he knew what was going to happen in Libya. I mean, Lindsey Williams told us, right? So, I mean, think he don't know? This I thought was interesting, too. Kind of relates with Soros, too, oil. Obama refused to sign the Keystone Agreement last week, which is for the pipeline coming from the Canadian tar sands down into the United States. So today, and this was like a couple of days ago, not long ago, I forgot exactly when, 11/11, okay, there you go, 11/11. Today, Canadian Prime Minister Harper told Obama that he looked to Asia to sell its oil, sell the oil to China. So, you know, you kind of would figure is telling him, because I don't think, I don't know if you like Obama or not, I don't think he's, well, I don't even care who the hell the president is, because I figure Soros is telling this guy what to do, and I assume it's because Soros doesn't have investments up in Canada, and he's got them down in Brazil and Venezuela and Russia, so it ain't his oil, you know. And whose is it? I guess it's Buffett's, right? So, this I found something else that was interesting too. Something about what Putin was talking about, and Putin's all business, and Like I stated before, Russia's got a lot of its strength back from the oil industry, which was investments from Western oil interests that got in there and gave them a lot of technology to do the deep oil drilling and stuff. So they're the number one oil producer in the world, and they also have the largest natural gas reserves in the world. And this European, from the European Energy Commissioner, Oettinger, whatever his name is, he was saying that the rhetoric battle over the natural gas issue seems to be heating up. Mr. Putin was speaking a day after Energy Commissioner Oettinger told the European Parliament that Russia is using natural gas as a weapon in international relations. Putin is not interested in having a new Red Army. He sees energy as being his weapons. So he's also saying the European Union has to recognize that quickly and react jointly. So in the case of, does Putin have a major interest in energy prices going up? He definitely does, no, without a doubt. That's why I keep thinking this rhetoric he talks against the United States about policies going on in the Middle East, and it'll drive the price of oil up. He don't care. I guarantee you he don't give a shit. It's his money, right? And then he's talking about Mr. Berlusconi, the Italian who chief of government stepped down. He gave him the warmest words. I read other praise quotes from him, but he says he was one of the last Mohicans of European politics. And he suggested that Mr. Berlusconi's relationships with women were just aimed at attracting attention. He was just flirting. And he says that Mr. Berlusconi was a very good man and not a politician. But then he added something, and to me it's probably a slip-up. Because these guys, they always do slip up. You got to pay attention to everything they say. He's an antichrist, and in Italy is an anarchic country. Putin said, adding perhaps as an afterthought that he was joking. So what I think, there's probably a lot of business relationships that Putin has with the West, and that people probably don't even, I don't know what they would be, but usually the deal is that the West has the money, Russia has the oil reserves, all kinds of different natural resources, and there's a lot of ways you can invest and put things on closed trading platforms with astronomical sums of money that are not available to the public. So I hazard a guess because I've been aware of some of that stuff. But just getting back to the precious metals again. I mean, oil looks like it's going pretty strong again today. It still hasn't broken 100, but precious metals don't look like they've been moving at all. And I think people are kind of like not excited about what's going on too much. But I'm going to tell you flat out, what really moved the precious metals last time was QE2. What you really need is QE3, and I think it's a no-brainer at some point in time that's going to come about, and that's what's going to push these prices up a great deal. Also, just do think that these wisdom words from Sam Zell, whatever you think of him or not, are very smart things to look at and apply them to your investment strategies in silver. And if you sold some physical silver and you regret it, I would suggest that you buy physical palladium at these prices. Actually, in 2010, I think palladium did outperform silver a little bit. So, even though it did bad in 2011 so far, but I think it may outperform silver in the long run. So, if you think you made a mistake selling a little bit of physical silver when you shouldn't have, get some palladium and pay attention to Sam Zell's words of wisdom here. That's my main point.